Well, good afternoon, everybody. I'm Jamie Cashman with the Government Relations team here at ISAC, and thank you for joining us today for this webinar. As the April 30th deadline looms closer for counties to submit their ARPA project and expenditure reports to the U.S. Treasury, we wanted to provide additional assistance as you submit these reports, as we received several questions from members as they have now gone into the portal. Our four main goals of this webinar are as follows: provide a brief overview of the project and expense report itself, take a deeper dive into the U.S. Treasury portal and provide guidance as you go through it. 3, solicit and answer any questions you may have in regard to this. And 4, lastly, provide additional resources that could further aid you as you go through this process. And first of all, I just want to let you know that we will be recording this webinar, and we will be getting this out to everyone with all the slides and everything, and then the resources as well. And then also for a little bit of housekeeping, to submit any questions, I know a number of you have been through Zooms before, so please utilize the chat option at the bottom of the screen to submit your questions. And please put your name and your email address on that. We will try to handle and answer as many questions as possible during the question and answer section of this webinar. But if we're not able to answer or we don't have time for those questions, we want the easiest way to follow up with you. So to kick things off, I will now turn it over to David Farmer, who is the Director of Budget and Administrative Services for Scott County. David, I turn it to you. Thank you, sir.
Good afternoon, everyone. Let me just set us up here to share our content here. Sorry about that. It's not. There it goes. I'm sorry. It's not cooperating. Here, share. There we go. Okay. You should be able to see my agenda here. So we have the U.S. Treasury guidance. This again, I'm David Farmer. I'm the Director of Budget and Administrative Services for Scott County, working through the ARPA portal tutorial. I've gone through this twice, once for the first reporting period, and then again this month in order to prepare for the next quarter there. ISAC has my contact information there if you have any follow-up questions after today's session. Again, I want to hit upon the Treasury guidance that, I'm sorry, are you seeing this big screen or are you seeing the small screen here? Jamie, can you verify?
I'm seeing the large screen.
The large screen, the agenda?
Yes.
Okay, thank you. So basically wanted to give you some guidance on the Treasury guidance, walk you through our current report. I'm going to pull over the web page to help answer any questions at that point. And as we said, we're going to do some questions at the end. Early into the meat of this here is that you should become familiar with the project and expenditure report user guide. That is the new version number 2, is recently issued on April 1st, 2022. It is different than the guide that was previously issued back in January or December. This guide here reflects changes that the U.S. Treasury has made to reflect the final rule there. So if you have not downloaded the most recent guide, I think we're going to put that into the chat notes and resources, that you want to make sure you grab this recent guide, because there is some key information within that guide that will help you prepare your report. We're dealing right now with the reporting period of April 1st, 2022 through April 30, 2022. We have a 1-month period in order to report the previous quarter's activity, Or if you're a tier 5, you may be doing your annual report now at the same time. Speaking of tier 2s versus tier 5s, this is a great graph, one of the best I've seen that develops what is our responsibility as governments and when do we have to report. Right now, we're focusing on this middle category, project and expenditure report. And if you're a tier 2 government, so that would be counties that are below 250,000 population, but received more than $10 million in state, local fiscal recovery funding, then we fall into this tier 2 and we have to do quarterly reporting, calendar quarters, so March, June, September, December, and we have to report that activity the following month after. If you're a tier 5 county, such as a smaller county that received under $10 million, then you would fall into tier 5. And then really we're only discussing this annual reporting. And again, it's by April 30, 2022, next week, or a week and a half, and then annually thereafter. And if you fall into that category, again, you want to make sure you pull down the most recent reporting guide each year, because I'm sure there's going to be other versions as they continue to evaluate and determine what are the important characteristics to report on. So what are we talking about as far as expenditures? This is a great graph here, figure 12, that's in that reporting category. The expenditures fall within the expenditure category, and those categories did change from our previous quarterly reporting, and we're going to talk about that here in a couple minutes. And then we report projects into different project areas, project A, project B, project C. Right now, Scott County has about 10 projects loaded, but we have not spent dollars in every project. Once you've identified a project, a purpose, you then have these 4 boxes to the right where you have project details, subrecipient, subawards, and expenditures. And all of these fields need to agree to each other in order to validate that project. A project details is, as it describes, is you're giving details about that project, in this case, a vaccination project. A subrecipient may be if you have subgranted this money out to a hospital or not-for-profit in order to provide those services, and you're not making programmatic decisions, you may have subgranted that money out, and so you've given money to a subrecipient. A subaward may be a contract to that subrecipient, and you're tying those 2 factors together. And then finally, you have expenditures, which are as those services are completed, someone is submitting an expenditure to you, or you're expending money in one way or the other, and you must tie those expenditures back to either that subaward or that, and that project detail. And all this information must agree to validate that project. When we talk about validation, we think of project status, a nice green checkbox. Project status in yellow, it means that you may have a warning or something, or some information that's still required to be completed, but it doesn't quite match up yet. And then the red checkbox there, the project status, red pencil icon means that all the fields have not been answered. And so you have some error that's not even going to let you move forward to submission. You want to get green checkboxes across the board. And we'll see that when we do the walkthrough here. I did the top section here, kind of like that previous screen here of building from top down. We do the project category, the subrecipient beneficiary, the subaward or direct payment information, and expenditures. If you start top down in your project logic, you should be able to get green boxes throughout your project. I mentioned these project categories have changed. Previously, Scott County had a project in the 3.10 for affordable housing. That's now 2.15 for housing. You'll want to verify that the projects that you had identified still match up to these expenditure categories. And I've got this over 2 slides. They've revamped these categories to fit within the public health or negative economic impacts of COVID-19. And they've recategorized and regrouped different projects here. And so you can see here on these 2 slides that these are the different categories that the U.S. Treasury is expecting us to expend money out of. These categories are a good logical way to think about your projects as you build them out into your reporting. And hopefully you can match up your projects that you previously identified into the final rule in this respective category here. This chart is again in that user guide, and I would use that as a useful tool. Here are some other notes or best practices. SAM.gov is a registration form online that's available to users that receive and utilize federal dollars. It's a best practice to inquire and document your awards that you're providing out to other entities or subawards, and validate that they have a SAM.gov registration, and that will help you with the salary information that is a required component for compliance. There's also the ability to upload a bulk file or download a CSV file. Let's talk about the upload bulk file first. If you have a number of projects or a number of expenditures, that reporting guide will help you tell you how to upload a CSV file with specific columns and headers in order to upload information for data entry. You could also use this in the reverse, being the download the CSV, and I've used that a couple times to help find where I have an error, and I have a yellow checkbox, a yellow error, and I'm like, why is that not matching up? And when I look at it in doing a CSV or an Excel format, I can help see, oh, I got the wrong project number associated with that. I have the wrong vendor associated with that. It's a little bit easier to help find those errors if you look at it from a different perspective. You have the ability to add projects with no expenditures obligations. Right now, Scott County has identified all of their projects. We have, like I said, 10 or 11 projects here. We've budgeted it through those projects for our fiscal 23 and 22 budget amendment. Our board has approved those projects as the planned, but we've not signed contracts except for 2 projects so far. And you'll see that when I do the walkthrough. We've obligated funds. We've signed contracts for 2 of our projects, but other than setting aside budget dollars, we have no obligations and no expenditures yet. Our first expenditure will be occurring this quarter, the second quarter of calendar 22. Take time to review Appendix E, those expenditure categories. I find that a very useful table there. And really take time to review all the appendices, whether it be the FAQs or other appendices that help identify different questions. Another note here, as of a change from what you may have done in the first quarter report, or December 31st quarter report due at January 31st, is as of April 22, the U.S. Treasury is moving away from those DUNS numbers. Those DUNS numbers we all know and familiar with over the past 15, 20 plus years. The U.S. government and on this U.S. Treasury report, they give you the option to fill in the tax identification number or that unique entity identifier, that UEI, which is available through SAM.gov. If you tie back your contracts, your subawards back to that UEI, that SAM.gov, is going to help you on that communication to the public about where your money is being spent. You want to take time to understand how if you think of this as a spectrum from left to right of how you're spending your money. Are you granting this out to another agency and they're making programmatic decisions? You may have a subrecipient relationship. If you are spending money as a vendor, a contractor, that's a contractor relationship. They're not making programmatic decisions. You're the one making the programmatic decision, but you're procuring something from them. Or you could have spent money as a beneficiary, providing ARPA funds to individuals as a part of a negative economic relief package. And so you're not procuring anything, you're providing a benefit to an individual. They are a beneficiary. There is an FAQ and FAQ 1.20 on page 112 of the guide, and also 200 CFR, part 200 of the CFR, subpart F, helps define the different relationships of subrecipient, contractor, and beneficiary. There's also a number of online resources if you have questions, or work with your external auditors if you have a question about how you should treat a particular payment to an entity, if it's a beneficiary, contractor, or subrecipient. You do need to differentiate that on the online reporting portal. And finally, my other big note here is to start today. It takes time to clear inconsistencies. Probably more, you don't want to start on April 30. It's going to take you more time than what you realize today. So go ahead and start today after this webinar. And so with that, oh, one more, revenue replacement is a key question that they've updated. I've done an FAQ here of the revenue replacement questions. This is just cut and pasted here, except for this top right box here. You now have a one-time decision due this reporting period to determine if you're going to do the standard allowance or the calculated loss. Hopefully you've identified this. Again, if you take that standard allowance, you can take up to $10 million as the loss related to COVID-19, and they make you document that now in the reporting portal. If you are an entity that received less than 10 million, let's say you received $7 million, you can choose to receive expend all 7 of your $1 million as a revenue replacement on government services. However, if you're a government that's a larger government that received more than $10 million, say $33 million in Scott County's case, the most money we can elect to take as a standard revenue loss is up to $10 million. And they make you certify that in this reporting guidance. What about if you have, do we need to report any subrecipients, subawards, expenditures for if you're taking that revenue loss, that's 6.1 revenue replacement. At this time, second paragraph, note that obligation expenditures reported under EC 6.1 and the EC 6.2 do not need to have subrecipients, subawards, or expenditures separately reported. I need to validate or emphasize that that's as of this time. They could change that reporting standard in future reports. So let's go ahead and take a moment, and I see that there's the chat. So we'll probably save questions to the end here. I want to go ahead and pull over my screen for the reporting guidance. And so you should now see that I'm on the compliance reports, and I can see it's in draft status here for my compliance report for this reporting period of Q1 2022 due on April 30, 2022. I want to go ahead and click into the edit button. It takes me through here. There's an option there to do the bulk upload templates here on the bottom. Again, Scott County is not to that point of doing bulk uploads, but some governments may be on that level. I'm going and click into the recipient profile. They do make you recertify who you are and what your reporting are. Here's that reporting tier again. If there's any discrepancies, they want to know. And is the recipient, is you, the government, registered under SAM.gov? Scott County is, so I said yes. Save that. Point of contacts here. Hopefully you have more than one or at least 2 different email addresses there to address the different point of contacts. The next screen is the project overview screen. I'm going to go ahead and make this a little bit bigger here. So this is a summary of our projects. Right now it says 13 projects. I have obligations of $6.2 million so far. So that means to me, as the accountant or as the reporting individual, I have contracts for $6.2 million in here. I have expenditures. We have money in expenditures incurred. If I'm cash basis, I've written a check. If I'm accrual basis, I have goods or services received, and I've reported that money out at this time. And you can see here, I'm going to go and expand this to 25 records, that I have 13 projects in here. I have 1 test project in here just for today's example. I have total obligations of $125,000. I have $125,000 reported as expenditures. I have this yellow checkbox over here on expenditures. There's something wrong with that, and we're going to go ahead and investigate that and clear that out here as we move through the session. You can see here I have other projects, another 9 or 10 here with $0 obligations, $0 expenditures, and then 2 projects with obligations. Scott County's actually signed contracts with those right now. And so we have that listed here in our reporting guidance as an obligation. Let me go ahead and open up that one that I have an obligation for. I have the project expenditure category. I have the detail, that 2.16. This was previously a different project number, and under the new category is now 2.16, services for unhoused persons. You can see the red star there for what's required to be reported. And strangely enough, they don't make you report what you adopt a budget, but you do need to report if you have an obligation or expenditure. We have a number of budget dollars, but they have not added those up into the reporting guidance. So I list the project name, I list a project receipt number, hopefully you are a recipient project ID number, I should say. hopefully you've identified all of your projects by a project ID, whether it be a grant number, a project number, something like that. You're going to want to keep that unique for both your internal records and for when you're audited externally. This contract was $3 million. We've not spent a dime in the first quarter. My current period obligations should be just for this quarter, for this project. Okay. When I get to the second quarter, the April through June, I expect this to be zero, but I start to have expenditures accumulating here in this bucket. And it's going to keep building up there, and it's going to track how much expenditures you have on this particular project. A status to the completion. I should say if you have a project that has earned income, you are required to report that or suggested to report that. A project description. Is there any capital dollars on this project? Yes, no. If you answer yes, there's another series of questions that populate. I'll show you that in a second. What impacted or disproportionately impacted population does this project primarily serve? And actually, you can list more than one category here, and they tell you that here in this series of questions. But you have to list at least one impacted community, or if it's for public health. And then this was a little surprising to me as first time I went through the projects. We do have questions based on public health or negative economic impacts that you need to report back to the U.S. Treasury. Provide a brief description of the structure and objectives of the assistance programs, including public health or negative economic impact experienced, and a brief description of the recipient's approach to ensuring that the response is reasonable and proportional to public health or negative economic impact of COVID-19. I've not seen a lot of literature yet that describes this reasonable proportional. It's best user judgment and how you describe that, your project's response to the negative economic health impact or public health. I do want to open up the HHSI one here real quick because I do have a capital on that one. So it did answer yes. I did explain what the capital amount was expected to be. And then also in here, there's a pull down menu. How are you tying those capital dollars back to the project? Affordable housing, supportive housing, recovery. And that's actually an enumerated response. I'm very keen on this word, enumerator uses and response. I think that's a useful way to group your capital dollars as being a permissible item. Demographic distribution, that's also, we saw that question in the past, and then the public health and negative economic impacts. So that's the project descriptions. I'll just show you one more real quickly about, this is a infrastructure project. I do the category. I have budgeted dollars, but again, I have no obligations at this point. It's on our budget plan, but we've not reached that contract status point. I still have a not started and a project description. They do have smart Q&As as you answer yes or no to certain questions, they will populate additional questions. I'm next going to go into this subrecipient beneficiary contractors. So here's where I have to upload a subrecipient information. So again, that UEI or tax ID number, legal name, address, point of contact. Is it a subrecipient, beneficiary, or contractor? Are they registered in SAM.gov? So here I have HHSI as one of those entities. I have that contract, that obligation, and I've entered in here. I also loaded a test information just to show the same information for subrecipient and contractor. The next screen is the subawards and direct payments. So again, here we're trying to provide information. If you made an award of $50,000 or more, what kind of contract is that? Is that a purchase order? Is it a delivery order? Is it a reimbursable grant? Is it a lump sum payment grant? Is it a loan program? Is it a transfer to another government based on reimbursable expenditures? You start to enter in the same information down here. A brief description of the award and an underlying eligible use. Okay, so again, I'm going to show you the information I have for HHSI. And again, it's important to tie back your subaward number or your project number, because that's how it's going to use some error checking. The test project here, again, I just made up a number, it ties it back together. Once you get a awardee loaded in this screen here, when you get to your expenditures, once you start typing in your subaward, it's not working right now, it starts to populate their corresponding project. And this is the award that once you identified your contractor payment or your subaward, you type in that same award here, and then your dates, and then you list the expenditure amount here. And so here you can see that for Salvation Army and HHSI, I have $0 here. I list the start date and the end date, but I have no dollars spent to date. That will change over time. But on my test project here, I have $100,000 for subaward number 123456. $100,000 I have in there. Okay. I also preloaded for us you have this other category, aggregate expenditures for awards under $50,000. So if I have, it's not on my prime contract, but I have a secondary contract for that same test project, but we've not spent $50,000 yet. I can list the projects here, select one of these projects, and then I list the type of aggregate amount of contracts awarded, contracts, grants awarded, loans issued, transfers, direct payments. And then I list the dollar amount there. And you can see here, I have this test project one, $25,000 expenditures. Keep that in mind here when I get to trying to clear my error here in about 2 minutes. There's also a category here for payments to individuals. Again, if you're doing that payments to beneficiaries, this is where you can list the project name, total amount obligated, total amount expended. So if we come back here to that project overview, and again, I set this up here that we have over here on the right, I have this yellow here. I'm not in balance for this test project. It doesn't exactly tell you why, but I do see here I have total obligations of $125,000. And on this project, I said on this project lead sheet, we spent $125,000. Well, if I was to do this, and right now it says $125,000 in the obligation amount in the project, but now I see I only have $120,000 listed in the details. So it's expecting another $5,000 either in expenditures over $100,000 or on aggregate under $50,000. So if I go back to that page of expenditures, come back down here. Oh, I gotta clean this number up. I'm going to go up to 25,000. I'm going to save my expenditure here. It's updated everything. I come back to my lead sheet, my project overview, and it doesn't recognize it yet. Let's try that again. This is where I was talking about it takes time. Okay, so what happened there, let's do that one more time. I updated that number. I didn't change it last time, but I went down here and I hit the project overview and it did a refresh for me. Okay, it looked correctly when I reviewed this screen. But I had to hit that project overview for it to catch up and review. And when I come back to the project overview, I'm now green across the top. Okay. So again, I mentioned that download the CSV. I'm going to open that up right now. It's going to pop open here. I'm going to pull that over here to the screen for us. Again, this is just a CSV format. You can see here the dollars amounts obligated, expenditures, obligation. it's a little bit easier way to try and figure out as your projects start to build out, where may I be out of balance? What things do not quite match up to the expectation? It'll help you balance everything out there. So I'm going to come back here to the report. I want to briefly show you the revenue recipient specific questions. Is your jurisdiction electing to use a standard allowance of up to $10 million not to exceed your total award? Yes, no. If your recipient is $10 million or greater, the recipient may enter an amount of loss up to $10 million. That's what I did right here in this box here. If recipient is under $10 million, so you only receive $7 million, or you're electing less than $10 million, you have to enter that amount here. This is a one-time election. My feeling is they're going to take your response here and then it will lock it in for future responses. Were fiscal recovery funds used to make a deposit in the pension fund? My guess is that most Iowa governments are saying no to that. And then please provide an explanation how revenue replacement funds were allocated to government services. To date, Scott County has not spent any of this $10 million yet. And so I note that in here. The county is planning on utilizing the standard allowance of up to $10 million on lost revenue for future reporting periods. No expenditures have been applied to that lost revenue category as of March 31st. We will move that forward as is expended. Save it and move forward. So after that, I can do my project certification. I'm not going to move any forward here right now at this time under this training session. What do I mean? So here's a question I see here as what do I mean by capital expenditures? So well, I can go ahead and pull that open here. I think that's a good question here. If I go back into my projects and I come into what is a good capital expenditure? So Scott County is considering some stormwater infrastructure related to water. So I'm going to open up this stormwater project here. And that's a capital expenditure. So again, if I'm a county government, a capital expenditure is something that I invest in for the long term. Water infrastructure, stormwater could be an option. Broadband could be a category. You could also make modifications for certain IT equipment, certain capital equipment responding to public health of nature. If you change the ventilation. Ventilation is a category. Let me pull that one up. That's a good example. Scott County Administration Center, Public Health. So we said we budgeted $3 million in this category. It's not started. It is this a capital expenditure? Yes. We've set aside $3 million. And here is the different categories. And again, this is a pick list here, but again, if you look at the reporting guide, they have this all listed out for you. But these are you could do acquisition of equipment for COVID-19 prevention and treatment, adaptations for congregate living facilities. We are currently right now under the installation and improvement of ventilation systems for this project. So a capital project is some sort of tangible asset that will have a long life. Can I give an example of how you would report an expenditure under revenue loss? So, okay, let's go ahead and do that. I think if you bear with me, I'm going to go ahead and do that project right now. So I'm going to go ahead and let's do a new project. I'm going to come all the way down here to revenue replacement 6. I'm going to do 6.1 provision of government services. Test revenue. Project ID 1, 2, 3, 4, 5, 6. Let's just do $1 million right now. Whoops, let's take a 0 off that. $1 million in obligations. Let's just call $1 million spent right away. Test revenue. Okay, so again, first one here, It's already green across the board. Project status, subaward status, expenditures. It's not making me report in any of the expenditures at this time. That was that slide about, do you need to report subaward, expenditures, or so forth at this time? And the answer right now is no. If I come back here to the expenditure tab, okay, let's see if, what was that subaward number that I used? I'm sorry, I should have wrote that down. I don't think it's even going to come up because we used 3, 4, 5, 6, 6, 7. Three, 4, 5, 6, 6, 7. Yeah, it's not linking me, letting me link right now under the expenditure awards for $50,000 for that question. So I think
It's at David, it's 667.
okay. Yeah, it should be letting me pick the project up here. I don't think it is. So let me, what's the subaward here for the test project? 1, 2, 3, 4, 5, 6. See, when I typed in that validated subaward here, it populated test project 1. And because it's linking back the expenditures to subrecipients here, and because we do not need to report that for 6.1 at this time, it's just taking that over here in the project awards and saying we're compliant right now. Now, we're compliant for this report, but you, from an audit standpoint, we've had discussions on this with the ARPA group later on, but you will still need to report what you're tying those expenditures back to when you have your single audit, your year-end compliance audit. And so you will still want to track those for internal purposes and external audit purposes. But for the reporting to the US Treasury right now, it appears that you just need to report those in total.
David, this is Jamie here. Hey, I know for a number of counties, they haven't expended or obligated anything, but are still required to report with this first annual report. Could you find an easy way to go through that so people could easily submit that?
Yeah, so if I was to do if you have no, so Jamie, if I understood your question, you've not spent any money yet, but you need to file a report.
Correct.
Yep. So what I would be looking at is, so 2 things. If I have not adopted a budget yet, and so I have no budget, no obligation, no expenditures, I believe they changed that in this project category here, where you would not report anything under the projects. And then I think there would be a Q&A there that populates that you've not incurred any expenditures as of yet.
Yeah,
Go ahead.
Yeah, I think you're supposed to provide some sort of a written explanation.
I think it will auto-generate a question saying, are you certifying that you've not expended any dollars?
Yep, I think you just have to type something into that. So
yep.
And then
real quickly, on the other hand, you could be proactive like what we have right now. We've identified our budgets and our projects and our budgets. And so just like here where you see Scott County Tourism, I've got my budget amount, but I have no obligations, no expenditures. I've identified the project of where we are likely to spend our money on, but this does not lock you in. You can still change this in the future, and this project could fall off your future reporting periods. And so then I would just delete the project at that point. Jamie, you got a follow-up?
Yeah, there's a question in regard to revenue loss or for premium pay actually, and how to handle that. And just walking through the process of that.
Yep. So if I go through back to this premium pay and I select, if I change this project, our test project to premium pay, and then I'm doing either public sector employees or public sector grants to other employers. So is that premium pay for my internal organization? Or is that premium pay to the private sector? Let's go ahead and do private sector here. I'm going to change this ID again. Let's just make it all ones. 1, 2, 3, 4. Let's make it 4 ones. Okay. Let's call
Actually,
it.
David, could we do it for the public sector? Because that's where the question is coming from, how to handle it internally with the county.
Okay, let's do 111. Public sector. We'll say not completed less than 50%. So now I have additional questions. Sectors designated as essential critical care infrastructure sectors. List sectors that identify as critical care. So again, use that reporting guidance here, that guide reporting guide. The guide lists out your critical infrastructure sectors. I believe one of the sectors was public health. Let's just call it public health. Number of workers to be served. Let's call it 40. Premium pay narrative. Number of workers to be served with premium pay in K-12 schools, where we're a county government, so we're going to say 0. Okay, so now I've got this premium pay category. So now I have a subaward status in red and an expenditure category in red. So a subreward, okay, so again, I'm probably in this subrecipient beneficiaries contractors. So you're going to build a project here, a contact name, and probably be your county government, and I would list it as a beneficiary. I would probably start there, and then the direct payments again you'll want to list, if it's for your organization, you're going to have to list your organization as the entity type. Really getting to the expenditures here. And again, if you're above that $50,000 or if you're below that $50,000 so far. I did find this, again, we had that test project loaded from when we tried to put that in there, and it's carrying through some of this information. You want to go ahead and X that out when you get in there in order to make sure it helps clear your previous entry. I did find some errors on that. So Jamie, I would say if you're an internal organization, you got to start from the top and that project overview, answer the respective questions. And then from there, you're looking at subaward status. And so I clicked that button and it took me to the 4th menu, subawards, direct payments. And so,
okay. So we had a follow-up question, but if you paid your premium pay and designated as $10 million lost revenue, you would not flag the premium pay as such, right? It would just be under project 6.1. Is that correct?
I would agree with that.
Okay.
If you were to do it under your lost revenue and report it under government services, because you're dealing with a category that's not one of those critical infrastructure categories, then yeah, you'd be under 6.1.
Sorry. So I'm clear, we need to report any project that we paid money out on, even if we're taking the standard allowance. Well, I would say if they're falling under the previous categories, I would say they would still have to, correct? Or
right. You're going to put the dollar spent, again, if we had that, I think we changed the status here. But again, if even on that reported revenue replacement and 6.1, again, so here it says again, I moved through this very quickly before. Please know that obligation expenditures under 6.1 do not need to have subrecipients, subawards, or expenditures separately reported. Okay, so in that question, if you're doing that premium pay, but they're classifying it as 6.1, you're under this category here. And now I'm compliant on that amount because I've got this $1 million and I'm categorized as revenue replacement.
So then we had another follow-up question. Just to be clear, we can consider premium pay as part of revenue loss rather than being required to categorize it as 4.1 premium pay.
If that's your, yes, you could. And that's my understanding. However, it may, if you, and I don't know how big your distribution amount was, but if I had $12 million, I could do $10 million revenue loss and $2 million as premium pay. And then I've utilized all $12 million. If I've done only $7 million and I'm just putting everything to revenue loss, they've now given you that option to put all $7 million to revenue loss without hitting the other categories first. I would say that's your board of supervisors discretion of how you want to utilize that money at that point.
Well, then we had a follow-up. I believe those are two separate EC and need to be placed as their own projects. Are in the expense categories. So I guess it just, you need to document, if anything, where you're using the money from. I know even though premium pay and revenue loss are two separate categories, if you're trying to look at it, you know, from one category and now moving into the other, yes, I think you could do that, but you got to make sure that you're taking it away. And if you're going into some of these other categories, making sure that everything matches up. So you just need to document everything.
I agree.
And then the other thing too, if you're taking the revenue loss option, we've received questions, well, could you put it in your general fund? And I've been on a webinar before where they said, yes, you could, but I would strongly suggest to keep it separate. I know a majority of the counties have done that and continue to do so. And then as you make those expenditures underneath revenue loss, and then we'll subsequently have to report for that, then you'll have that accounting as well. So every time that you make an expenditure out of there, and I know I've talked to a number of you before, to make sure that you're passing resolutions accordingly that matches everything up. So when you do go through that reporting and so forth for the next annual report, you'll be ready to go specifically for that revenue loss component.
I'll wrap up here and just, you know, if you find an error on a project here, you can, I open up that project. I don't want, this isn't quite working out how I want to. I just delete the project. There it comes off my list. And so again, this project summary sheet is your friend. You're looking to balance it off at that point.
All right. Well, thank you, David. Do we have any other questions? All right. Well, go ahead. Do we need a separate resolution for each expenditure, or would one resolution designating all of the 6.1 category work? I don't think there's anything that's prescribed by the federal government, so that's up to each county on how you do it. Obviously, when people ask, do we need to pass a resolution, I strongly encourage that you do. So how you decide to do that, that's certainly up to you, but how it makes it easier for your county, you need to do it accordingly. Any other questions? All right, well, lastly, we wanted to provide some additional resources as you go through this process and file your report to meet this deadline. And could we go to that slide now, please? So the first is another webinar from the U.S. Treasury. It's a short one, just a general one that'll walk you through the portal. So another resource for you to have. The second one is another webinar from U.S. Treasury going through specifically if you're taking that revenue loss option and going through the portal on that. The third resource is that user guide. So if you have any questions, always refer back to that going through it. There will be another NACO webinar tomorrow that people can sign up for that at 2 o'clock. Also too, the ARPA, we also have an ARPA resources base camp for those that don't know about what a base camp is. Basically, base camp is just a public forum for Iowa County officials, specifically that they can provide questions for their peers, for those that have already gone through into the portal and can ask additional questions and hear back from other counties as well as they go as they go through the process. And then lastly, a link to if you have questions specifically you'd like to hear from the U.S. Treasury. And lastly, of course, you could always reach out to us at any time with additional questions, and we'll get back to you. So again, first of all, David, I want to thank you for your presentation. And I want to thank all of you for joining us today, and let us know if we can be of any further assistance. And we hope you all have a wonderful day. Thank you.